During COVID, when COVID came out, everyone was saying property was going to crash. And before the 60 Minutes said that property was going to crash by 40%. I said no. Housing demand is locked in for the next 40 years.
It's not the cost of getting in, it's the cost of not getting in. So if I didn't do it, it would have cost me 50 times. And I'd be working till I was 75, man.
So there's going to be two types of people that are going to happen from this. There's going to be one type of person that's going to believe all the BS and that are uneducated. They've either got the wrong property or they're buying the wrong property or they're getting out of property and they're going to miss out. The educated people that get the right property, the ones that are constrained by supply and have got more demand, are going to do very well. Hello, this is George Markoski coming to you live with the Positive Property Show. Welcome. Tonight we're going to be talking about the next housing crisis, and it's already started. So let's go through this. Have a listen to this.
There are fresh warnings tonight about the impact of the federal government's property tax overhaul, with predictions of higher rents and lower supply. The construction industry releasing figures at odds with Treasury's own modelling on the contentious bill.
The bodies that build tonight intent on tearing down the Treasurer's tax changes.
It does not resolve this housing crisis, it's going to make it worse.
A coalition of construction lobbyists has measured the impact of Labor's moves to limit negative gearing and remove capital gains discounts, finding renters will pay up to $477 a year more.
Any landlord who is coming out as a result of this to raise rents is a plain gouger.
There is Treasury modelling which shows a very small increase in rents.
But the industry analysis indicates rents will hike $9 a week by 2030, more than 4 times Treasury's forecast of $2. Builders also predict 9,000 fewer new homes would go up, while the government claims there'll be 12,000 more.
It's about making sure that younger people have a chance to break into the housing market.
At the expense of renters, and it's going to reduce the supply when we can least afford it.
It is just a tax grab because this government has run out of money.
A debate that will consume Canberra as a nation of amateur investors and aspiring owners watch and wait. Liz Daniels, 9 News.
This is 9 News, talking about the housing crisis and talking about how rents are going to go up because of the government. So the Iran conflict has pushed petrol above $2.50 a litre. It's triggered a global oil shock. Petrol climbs above $2.50 a litre. And basically, what this means is more inflation. So if you wanted to break from inflation, I've got some bad news. The household cost of living pressure is going up again. The 6% wage rise is feeding the inflation rat wheel. 2.8 million workers are going to get a 4.75% pay rise. And the minimum wage rise is going to go up 6% in Australia from July. The minimum wage is increasing to $26.44 an hour. So wage increases are ultimately reflected in higher prices. What is this going to do? It's going to feed the inflation rat wheel even more. So we've had 10 out of 15 quarters of negative per capita GDP growth since 2022. What does that mean? Australians are working harder, but going backwards. So we've just hit the 28 million population milestone. Funny enough, if you look at the projections, the ABS projected we wouldn't hit this until 2051. But because our government has been so keen at a lot of immigration, we've hit it a lot quicker. But you think about that, 2051 when we were supposed to hit it, and now it's 2026. That is a lot quicker. Migration is actually running at 2.35 times what Australia projected. In 2003, the ABS, which is Australian, now I forgot what it was, so it's great. The Australian Bureau of Statistics. Thank you, Dave. Basically, the ABS does data for Australia, and they forecast there's going to be 100,000 migrants a year. But the actual migration averaged 235,000 a year since 2004. So population is 1.6 million above the forecast 25 years earlier. The 2026 budget upgrades migration by another 55,000. So instead of slowing down, they're building it up. So per capita GDP has gone down, and we've had 10 of 15 quarters negative since Q2 2022. Living standards are tracking at 0.5% below 2022. And what happens is immigration dilutes GDP growth per person. And that's what's been happening. So dwelling approvals, 200,423 homes have been approved year to April 2026. So our 240,000 home target for this year is already 16.5% behind schedule. After 22 months, Australia's 82,700 homes behind pace. So at the moment, we're below target, about 16%. But not only that, approvals have actually fell by 3.4% in April alone. So instead of doing catch up, we're falling further behind. And this is what's happening with the housing crisis. This is a pretty interesting time we're living in because this has never happened before, where we've got two things happening at the identical time. Let me explain. On one hand, we have got inflation and we've got rates that have gone up. We've got changes to tax, which is going to affect the price of property. So there's going to be a decline in certain properties. That's a fact. And on the other hand, we've got a massive constraint of supply. And when there's a constraint of supply, that's pushing properties up. So what's the key here? Well, one of the keys is not, just saying, okay, property is going to fall, I'm going to get out, or waiting for them to drop so you can get a good price. That's not the way to do this. I've been through this many times, and I'm going to go through some stats and show you exactly, like I promised last week, I'm going to show you what I've predicted in the past and what I'm predicting for the future, because this is important. So there's going to be two types of people that are going to happen from this. There's going to be one type of person that's going to believe all the BS and that are uneducated. They've either got the wrong property, or they're buying the wrong property, or they're getting out of property, and they're going to miss out. The educated people that get the right property, the ones that are constrained by supply and have got more demand, are going to do very well. Because look at this number, 315,000 homes short of the 1.2 million target. Out of 1.2 million, 315 is a massive number. Right? So basically, we're short the city of Canberra. We need to build another city of Canberra just to catch up. It's not going to happen. And there's a $13.7 billion hole in Treasury's housing forecast. See, they assume $315 billion in housing investment, but the RBA has forecast just $301 billion, which is $13.7 billion less. So the gap implies there's over 10,000 fewer homes built, because that's what we need, that $13 billion to build those homes. And rents at 5.9%, the biggest gain since late 2024. National advertised rents rose at 5.9% the year to May. It's the biggest annual increase since September 24. And rent growth accelerated across all capital cities, and most capital cities saw rental growth pick up pace. Not only this, a lot of people are actually factoring in these new taxes could push rents up as well. So renters are paying $204 a week more than 5 years ago. And renters now spend a third of their pre-tax income on rent. Vacancy rates still remain very tight at 1.5%, and more renters are forming group households to cut costs. What does this mean for investors? Well, the 5-year supply gap of 315,000 homes that never built. So the Middle East conflict could add 50 to 70,000 to build costs. Building insolvencies are rising as margins come under pressure. Less supply, more demand means higher rent. But not only that, with the extra 50,000 to 70,000 build costs for builders, what that means is a lot of builders are going to tap out because they won't be able to finish their projects. There's not that much profit in building a house, especially when you're doing it at scale. And if your costs go up by this much, you're out of the game. You're going to have to tap out. So this is a very dangerous period, because you've got to choose the right builder, because you don't want a builder that's going to go broke. And as we said before, budget upgraded migration by 55,000. Now, this is ludicrous because, the budget increased migration by another 55,000, which means more renters are chasing fewer homes. And government policy, even though they're saying they're trying to help the average Australian own a property, what they're actually doing is the opposite, right? They keep adding more demand and less supply, and the rental crisis is getting worse. What they've done with tax now is going to reduce the supply of properties even more. So they've reduced the supply, then they've added another 55,000 people to more demand. Instead of doing the fiscal thing of actually just reducing the amount of migration. Very simple way. Reduce demand, and that's going to help the property market. Increasing demand is not going to help property prices go down. So Melbourne and Sydney, they're on track to become mega cities. And I would say Brisbane is next in line, as I've been saying. So you look at this. At the moment, Melbourne's 5.4 million, forecasts go to 9.1 million. Sydney's 5.6 million, forecast to go to 8.5 million. So interesting that Melbourne could actually be more populous than Sydney by 2065. And then Brisbane is forecast to go from 2.8 million to 4.6 million. So Brisbane's going to be a mega city. So Australia's population is expected to reach 41.4 million, up by 13.4 million people. What does this mean? Literally, housing demand is locked in for the next 40 years. Now, there's probably no other country on earth that has got a 40-year locked-in demand for property. Rent pressure is not going to go away. Upward pressure on rents is likely to persist due to very low vacancy rates, and that's going to happen. So 41.4 million people. And what's happening is the supply crisis continues to favour investors. So the investors are on the right side of the supply crisis because rents are up 5.9%, while vacancy rates near record lows. High migration is locking in long-term demand, and new build investors benefit from both stronger tax settings and rental growth. So as an investor, you're going to do a lot better right now than anyone else if you know what you're doing. This is what I want to get to, okay? I want to talk to you about my track record, the top 100. There's 15,000 suburbs in Australia, and at any given point, out of those suburbs, some are going up, some are going down. They're not all going up and down at the same time. And when times are good, a bigger percentage of the 15,000 are going up and a smaller percentage are going down. And when times are bad, the other way around. But at all times, there's suburbs that are going down, there's suburbs that are going up because there's 15,000 different markets in Australia. Now, over the last 20 years, we've helped over 3,500 Australians invest in property. We've done over $3.5 billion worth of deals. Actually, we've done more than that. I would suggest it's about 4.5 billion. And every member, every deal has made a profit. So 100% profit success rate in Sydney, Adelaide, Brisbane, Perth, and other suburbs. So what do you think of that for a track record of 20 years? And out of those 20 years, not one builder has gone broke. So let me show you the numbers. There's been 4 crashes over the last 20 years. They screamed about these, and these are the 5 predictions that I called, and 1 asset that never broke. So if you look at this graph here, there was the GFC, and you look at the graph, there's a little dip. Then there was the APRA, Royal Commission, which went down. Then there's the COVID, and now we're waiting for the next one. So there's the post-GFC, the Sydney boom, the APRA bottom, the COVID boom, and I've called all of them. Now have a look at this. My first prediction, GFC. Everyone panicked during the GFC and a lot of people lost money. And basically what we did, we bought in the GFC and what did we do? Made over $90,000. So the cost of waiting would have cost you $90,000 if you waited for the property market to get back. The GFC was the worst thing that's ever happened to property over the last 50 years. And even through that, in the top 100, we still made money. So while people were losing hundreds of thousands and millions of dollars in property, our members were averaging $90,000 per property during the GFC. Next, the Sydney boom. We called it post-GFC before it happened while the buying was good. And we could see Sydney was good buying at the time, but everyone's saying it's not going to recover. And our members made on average $490,000 per property in the Sydney boom. And that's the cost of waiting there. Next prediction, the COVID boom. During COVID, when COVID came out, everyone was saying property was going to crash. And before the 60 Minutes said that property was going to crash by 40%. I said, no, COVID's going to restrict supply. And when you restrict supply, properties go up. Everyone said I was wrong. Everyone said, no, money's going down. No one can do anything. Property price is going to drop. What happened? Properties went up. And the median property price went up $250,000. Most of our clients made between $250,000 and $400,000 per property during the COVID boom that everyone said was going to be a bust. And I called it. pre-COVID. Now, prediction 4, Brisbane. I was saying for a long time, Brisbane's going to catch up to Melbourne and Sydney. Everyone said Brisbane wasn't going to happen. We went in and we made over $450,000 per property. That's like 85% in 5 years. So Adelaide, the sleeper market. Once again, we went in. Everyone said Adelaide was dead. We made $405,000 per property. We called it again. And then Perth. Everyone said Perth was finished. We went in and we made $410,000 per property. So the last 20 years, we've nailed it. We've predicted every boom and we've hit it time and time again. You've got me on video saying it. You got me talking about this. But what I want to do is I want to show you the top 100 suburbs in Australia and the average suburbs, because this is what you've got to look at. That blue graph is the average properties, how they are up and down, the 15,000 suburbs on average, and the median price now is 895,000. And you look at the top 100, they do a lot better, and that's 1.453 million average price. So the top 100 suburbs versus national median, it just kicks its ass, right? So on average, the top 100 made $558,000 more than the average property over that period. So what's my next prediction? Let me show you. Write this down in your calendars. Okay, this is what's going to happen. Between 2026 and 2031, next 5 years, the right properties are going to go up $400,000. That's right. When everyone else is saying they're all going to go down, we're all going to lose money, I'm telling you the right properties are going to go up $400,000. And it's a very simple thing with maths, right? The rate cycle is going to be easing and we're deficient supply. So the fact of it is when you don't have enough properties, they're going to go up. So what I'd like to do now is I've shown you the proof. I've done this for 20 years straight. 20 years proven, 3,500 Aussies, 5 billion in deals done, and 100% profitable. Now that's something I'm very proud of. I'm very proud of this, and we're going to continue doing this. So let's talk about some real case studies here. I want to talk about Mina and Dora Bokta, and I'm going to go through a case study, and hopefully after that we can actually say hello and meet them. But Mina and Dora Bokta, they joined our program, and they bought this property here in Caboolture for $552,000. So this is in Brisbane, and you saw that graph. And this is a 3-bedroom, 2-bathroom, 1 car, cute little property. They use equity to pay a 10% deposit. Settled in July 2025 for $552,000. The market value now is $780,000. So this is less than 12 months. The property has gone up $228,000. Just shows you exactly what we're talking about. So in 10 months. Okay, I'm going to stop my presentation and I'm going to say hello. Hopefully I can see you both. Okay, Theodora and Mina, hello, how are you?
Hi, how are you?
Hello.
Good to see you. And I love going through these case studies because what happens is a lot of people see those graphs, we be predicting things, but sometimes it doesn't seem real. But when you meet someone in real life like yourself, it gives people a little bit more reality, right?
Yeah, definitely.
So what I want to do is just talk about, okay, how did your journey start with property? How did you decide that property was the way to go?
I'll let Mina start.
Okay, Mina.
Yeah, well, for me, actually, I dipped my toe in it a long time ago. I tried to do it myself, and I actually started off by buying a couple of properties in Broken Hill, and I dabbled, and I didn't do so well because I tried to do it myself, and I didn't really have too much success. And then Dora and we tried for a property in Mount Druitt, which was an apartment, which we had a little bit of better luck with it. But again, because we were on our own, we were doing the research ourselves. So we didn't have the backing of somebody like Positive Property to help us out with where to buy and what to do and all of that. So we got lucky in that the appreciation was good, but the apartment was a little bit older. And then, so moving on, we sort of came across Positive Property, and that's where we had massive success in that we were able to then use equity from one of the first properties that we had and then use that equity to purchase our first property in Caboolture. And that's where we first settled on that one in July last year. So far, so good. So, yeah, we sold the property that we had to begin with because it was a little bit older. And that was the advice that you guys coached us with. And we're moving on now at the moment. We're just meeting with Carmine, and we're about to get financing for our second and our third one.
Nice. Excellent. Excellent. And look, you've had your property that you bought 10 months ago, and it's made how much? I've got to look at the
I believe it's close to 150 now. Yeah, so we bought it at 552.
Yep.
And
I think it's worth seven
it's
something.
just, estimated close to 7 something now, yeah.
Can someone type in the chat how much money they made out of that? Because I haven't got the numbers on me. I'd like to know the exact number. It'd be good to know.
Yeah.
Yeah.
So Mina actually skipped over property number 2, which we actually bought in Loganley 10 years ago. So Loganley in Brisbane.
Oh, okay, there you go. So thank you. Let's go through that.
So Positive Property actually helped us with some advice on whether or not to hold on to it, or is it a good time to sell. We actually ended up selling it just in April. We settled.
Yep.
And so we're actually looking to use the profits from that to go on and buy another property with Positive Property. So just to give you an idea, we bought that for $310,000 back in 2016, and we sold for $825,000.
Nice.
Very happy with that.
You did very well.
So we got a lot of good advice from Positive Property about that. We did buy it beforehand, but again, we didn't buy that on our own. We actually had some advice at the time as well. The property itself wasn't perfect. It was built in 1985, so we couldn't capitalize on depreciation. And there were a few other issues with the property, but it worked out really well.
Excellent. And yes, I've got the number here now. $228,000 you did in 10 months, which is a good start.
Yeah.
And that's beautiful because you got a bit of equity there and everything else like that. What was the hardest thing about investing in property?
Moving forward.
Yeah.
Yeah, so just overcoming that fear of moving forward, being able to sort of push yourself out of that comfort zone and taking that step, I guess. For me, it was overcoming the fear of failure in the past and being able to go, okay, you've maybe hit a couple of challenges or failures in the past. You're going to be doing it again, this time with even more money. But I guess the way I've overcome that is, you've come from nothing before. Worst case scenario, you'll end up with nothing again. So, yeah, I guess, no risk, no reward. So, yeah.
Okay, I guess we've never actually seen the property as well. So I think getting over that mental hurdle of, you're investing in a property that you've never seen is always a challenge. But we had confidence in the team that we had and the information that was being provided to us. So that really helped. Yeah,
it's funny because when I met Christina, we're in Queensland and we're going to for a drive up to Noosa. And as we were driving, I was going through a few suburbs. And I go, oh, yeah, I've got a property there. I wouldn't mind popping in and seeing it because I've never seen it before. And she goes, what? You've never seen it? I go, no, I haven't, right? And I go, actually, I can't be bothered getting at the highway. I won't see it, right? So I still haven't seen that property.
And look, as long as the numbers are there, I don't really need to see it at the end of the
exactly.
day.
I'm driving past saying that property made me $300,000 last year. So it's good. It doesn't matter. That's the numbers you want to look at, right? So, and this property here, the one you made, how much are you making in? What was it?
On Caboolture?
Yep, $228,000. Have you seen that property yet?
No.
No, you haven't.
Just on paper and photos. We like to treat it like a game of Monopoly, and we want to detach that emotion because as soon as we sort of go and see it, there's that emotion of sometimes of would you live there yourself, and sometimes there's that emotion around that. So
what's the most surprising thing that's happened along your journey investing in property?
I think the amount of success that we've had in such a short time with Positive Property. When we joined Positive Property, we had a really great turnaround with success in that we started getting the right advice. We started investing in the right areas, and we started seeing things turn around in that, we started hitting the right tick boxes along the way. And that sort of started changing the mindset for us, in that if we have the right team, we can sort of sit back and go, okay, it's not so bad. We don't have to sort of stress about it's all on us. We can sort of relax and take a breather a little bit and just sit back and sign on the dotted line and not have to worry so much. So it was a bit of a relief in that, and all we had to worry about is that we just have to get our deposits together. We go to work every day, come home, and that's it, really. So that was the beauty of it, really.
Excellent. Okay, that's pretty cool. And I think having a circle of safety around you that can do all the hard stuff is important, because I'm not very much of a details person. So when I started my journey, I had to get a circle of safety around me. Otherwise, I wouldn't get everything together. And having that team is always much better, because you trying to be an expert in everything's not going to happen. You know what I mean? It's impossible. And that's why, a lot of people say, well, what about this? And I go, well, talk to the lawyer about that. What about that? Building inspector for that. Because you've got to get the right people to do the right job, and not everyone can be an expert on everything. And I think once you trust a group of people that can work together for you, you can do amazing things. And looks like you've started building your portfolio, which is very exciting.
Yeah, very much so.
What would you say to people watching the show now? This is going to be on YouTube. You're famous. People that are watching the show thinking about positive property, what would you say to them?
I would say trust the team. Take that leap of faith and take that step outside your comfort zone. You might sort of be taken aback and see something new, and see a fee or see a process that you've not seen before, and you might go, that's not something I've seen before. But trust it and trust the process, and know that, hey, we've succeeded, other people have succeeded, and it works. Just it's something that is working, and it's been working for other people. Yeah, take that leap of faith.
I think that circle of safety is so invaluable, because beforehand, me and Mina had goals where a brother introduced a team, and trying to explain that goal to an accountant or a mortgage broker, they don't always understand what you're trying to do long term, and it's really hard to get them on board sometimes. So that circle of safety was really invaluable. But also, when you sit down with your coach and you speak to them, you realize they have experience of their own. They have a portfolio of their own, so they know what they're talking about. It's not like sitting down with a mortgage broker who doesn't have any property of their own. That feels kind of silly. So everyone you're speaking to has genuine experience of their own. They've got their own skin in the game as well. And that counts for a lot when it comes to building your confidence as an investor as well.
Yeah, that's a good point, and thank you for bringing that up, because a lot of our staff started off as clients, funny enough, and which is pretty cool. And I find they're the best staff, because they've already been through it and they've experienced it, and they believe in it and they love it, which is great.
Yeah, I've gotten some really good advice about, like with that last property that I had. My coach Charmaine, we were talking about options, and she said, well, why don't you check with the council to see if you can subdivide? We were getting some really creative solutions to play with. So that's what I really liked as well, having some solutions to work with, as opposed to someone saying, well, no, that's not possible. So that was something I thought was really valuable as well.
Excellent. Well, I wanted to say thank you both for joining me tonight. And I look forward to seeing your journey of building your property portfolio, and look forward to handing out your belts at the belt ceremony in October, if you're coming in September. Is it October? This October, we're doing an event in Brisbane.
Awesome. Thank you so much for having us.
Thanks for having
No worries. Thank you. Awesome. Thank you. Bye-bye. Okay, now we've got one more case study tonight. Okay, here we go. This is Claudio Krupi. This is his first property, Anglevale, paid $539,990, 1 car, 2 bathroom, 3 bedrooms, 20% cash deposit. So he paid $107,000. Settled in December 2024 for $539,000, and now the market value $770,000, current profit $230,000. Hey, Claudio.
Hey, George, how are you, buddy?
Very good, very good. Because I want to talk about this with you anyway. So basically, you bought Anglevale, you paid $107,000 deposit, cash deposit. You settled in December 24 for $539,000. Now the market value is $770,000. So the profit equity is 230,000. Great profit in equity, but I want to talk about what you did next.
Oh, that was a good story. So within 4 months, I was presented another property from Positive Property, and I got some advice to use a deposit bond. Now, that's not available to everyone, but fortunately, I was able to do it. So it was a property in Beaudesert. You probably want to show that up, which is, and that was what we call a one-part contract, where all we had to do is put a deposit down, and then when it was built, we settled. So it gave me, so in between, so while Anglevale was being built, I had the deposit on Beaudesert. So they were both running at the same time and both lifting in value as I was going. So Anglevale was amazing because it took from the day we put the deposit down within 12 months, exactly 12 months, start of 25, it was built. We got it tenanted in January in 25. And it's 16 months and I've got the dream tenant, which is awesome. But prior to that, just last year, it was mid-25, the Caboolture property settled. Now, I didn't have to put any money of my own in. However, I did put a little bit because I just thought I had some money and I just like to have a little bit of equity. So I put in only $20,000.
Yep.
And the equity from Anglevale was the deposit of 100,000 down on the Beaudesert property.
Dude,
So
that's
it's only
amazing.
20,000. So fast forward to 2026,
Yep.
4 weeks ago, or let's just go a little bit back. I went to my two adult children, and I know there's a lot of people out there who are concerned about their kids getting into the property market. And I said to them, hey, why don't you join me on a venture on another property? And they were very excited because, look, let's face it, they work very hard. However, it's very hard for young people to save money, especially they're renting.
Yep.
So I was able to do a deal where we went 50% me, 25. And we bought another property in Hervey Bay, Queensland at $849,000. I know it sounds like a lot of money, and it is. However, we know that within a few years, that's going to be worth a lot more than we bought it for. Now, we're building that, but again, I didn't use my own money, George. I leveraged off Beaudesert.
Yes. Because how much equity did you make in Beaudesert?
So I bought it for $519.
Yep. Here we go.
You want to show that up? Now, listen to this.
You paid $519.
$519. Now, this is a genuine valuation because I needed it to get the money for Hervey Bay.
The other one.
This is Hervey Bay property. So that's Beaudesert.
Yep.
It's worth $670,000. So in 1 year, not even 1 year, there's $150,000 uplift. So we're now building the property in Hervey Bay is being built. It's a beautiful property, 700 square meters, 4 bedrooms, and it's in a great spot. The land has already gone up around $40,000 in 1 month.
Yep. So total, how much money have you totally made now? So you've gone
around $470,000.
$470,000 in what period of time?
Really, in 18 months.
$470,000 in 18 months. So that's pretty amazing.
Pretty amazing.
You must be pretty happy with yourself.
I'm very happy because, look, I'm 61 years old and I want to, and you know, we own our own home. However, we never really did anything with it. Now, we didn't use any leverage on this home. I'm doing this on my own to build my own portfolio for retirement.
Yep.
And I feel so happy about the future, not only for me, but for my children. And I couldn't do it on my own, George. There is absolutely no way ever that I could have done this on my own.
Okay. And so take back before you found us, you know, what were you thinking? How did you find us? Why did you find us? Why did you decide to do property?
Well, I saved a bit of money and we had businesses during COVID. We lost a lot of money and we're at that point where we have to make this work because I've saved up a little bit more money and I had to invest my money again to retire when I want to retire. And so I was looking at a lot of companies and they're all talking about education, learning, then going out and doing it yourself. But then I came across Positive Property where I didn't have to learn everything to get into the market. In fact, all I had to do was be present and take action. And I had this team of people around me that knows a lot more than me that could take me through the process. So because I'm very busy. What I do, I travel a lot and I'm very busy. I couldn't do it. I didn't have the time. And what made my mind up is when I tried to do it a couple of times on my own. I thought, let's just look on realestate.com. I opened it up, had a look at all these properties. My eyes started to glaze over, and then I just closed it down. I go, I can't do this. This is too hard. So the blessing of positive property and having all that circle of safety around you, it's such an easy process. So there's a game plan. In fact, stay there. What about my fridge? This is the game plan.
Yep. Okay, there you got that on your fridge. Awesome. I love it.
That we go through, and I was just determined to go through it. Now I've gone through it twice, and I'm nearly to the other side on the third time. Very excited because everything's step by step, and all my properties are on my phone. I know exactly when the rents come in, what's due, when the money's going out. I just send it all off to my accountant. It's a dream. It's all automated. I love it. It's awesome.
Beautiful. Because I mean, you made nearly 500,000 in that time period. I mean, if you had to work and save, how long would that take?
Wow, to save that much money, and I get paid pretty well, it would take me at least 15 years.
Yeah, because you got to pay tax, you got to live.
Remember, we work 3 days for the government, then we only have 2 left.
Exactly, and that's the issue, right? And that's it. So that's the thing. But what I love about what you've done, right? You've had the courage, you've joined the program, and you've taken action, and you've reaped the rewards, which is great. And as you know, a lot of our staff, a lot of our team started off as clients. So, you look at Alicia, Charmaine, and a lot of our team ended up becoming clients after they became staff as well. So it's a bit of both, right? Because everyone in our team is really motivated and loves property a lot. So the other thing I wanted to let everyone know, about your announcement, our special announcement is, Claudia, you've joined our team. So welcome.
Absolutely. Love it. Thank you.
Which is great.
I love it so much. Yeah, it's a great team.
Yep. So you're going to be in enrollments, basically help people join the program and enroll people, which is great. And you only started a couple of weeks ago, and you might actually have a few people that joined the program already tonight.
Correct.
If you have, please type in the chat. It'd be great to see you. So that's pretty awesome,
It is, George. I'm very blessed to be a part of this.
Well, I've always loved your attitude, and you've got a great attitude. You're very positive, you're motivated, and you love property. And that's what we do. I feel that with what's happening in the world at the moment, without property, there's going to be no freedom for anyone. This is the only way to actually do it, right? There's no other way. You cannot save yourself to freedom. Impossible. You've got to invest your way there. I could not make the money last year, how much money I made at a property. It would take me 20 years to work for it. Impossible.
No, it's impossible.
Yeah. So what was your biggest challenge along the way? I'm curious.
A challenge on the process of building these properties or before?
Before you joined the program, what was the challenge? Then afterwards...
okay. So the challenge was I bought property before, and they've always been wrong decisions, and we've lost money. And I just didn't want to do that again. As you get older, you've got to be very careful with the risks you take, because when you're young, you can take risks and recover. However, once you've gone through business and things happen like COVID or wrong decisions in other businesses or property, you have to make the right decision. And if you don't know what you're doing or you have no idea, don't do it.
Exactly.
It's simple as that. I'm in hospitality, and I see people open restaurants and they've never done it before, and I predict within 6 months they fail. So never do anything you know nothing about. If you don't know anything, join people that do, that can guide you along the way. That's how it works.
Exactly. So, it takes 10,000 hours of execution to become an expert in any field.
Sure.
Right?
Sure.
So the fact of it is, for example, let's say, you had appendicitis and you wanted to take your own appendix out. you need 10,000 hours to learn how to do it. You wouldn't do it yourself, would you? You wouldn't go on Google and go, how do I take my pending sale, right? But buying a property takes expertise as well.
100%, George.
All right.
George, I must say that the money, people always ask me, so, well, how much did it cost, Claudio? And I said, well, it cost me X amount. And they said, but that's a lot of money. I said, but let's look how much money I've made. Don't look at what I've invested in. Look what how much, for that X amount of money, I've not only gone 10 times, it's gone 20 times. I could have never done that myself. It's not the cost of getting in, it's the cost of not getting in. So if I didn't do it, it would have cost me 50 times.
Well, if you didn't do it, it would have cost you $470,000.
And I'd be working till I was 75, man.
Yep.
We can now retire within 2 years.
Wow. That's amazing.
With very, very comfortably.
That's beautiful. That's amazing.
It's exciting. And my kids who are adults, they're not kids, 28 and 29 and 30, they're so excited. They said, Dad, we're property owners now. I said, you are. And the joy of helping your children get into property without giving them money. Now, I didn't give them a cent. There was there's a little bit of money I gave just to bits and pieces to help us get in the property, but they feel like they've achieved it themselves as well, which is really very, it's just good for them that they're doing it themselves as well. They're saving, they're putting the money aside. It's just a very good testimony to the program.
It's fantastic. No, it's wonderful that your kids are doing it as well, which is awesome. Love that. It's great. Yeah.
It is exciting. Very happy.
No, it's very exciting times. And look, the media once again is saying that the property market's going to crash and blah, 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 blah. And certain properties will. And there could be a bit of a dip. But that's why I wanted to show people the graphs of the last 20 years, what I've been predicting. And even the GFC, if you look at that graph, it doesn't matter. It's a little blip, it goes up again. It doesn't matter. The key is being in the market, because trying to time the market is never going to get you there. It's time in the market that's going to get you there.
If anyone out there on the border, just do it.
Okay.
Because what do you say, George? The cheapest property was 20 years ago. The next one is now.
So yeah, exactly. Okay, someone said challenge equals delays on every single property. Settled in June 2025, and we still don't have a slab. With Circle of Safety, things can still go wrong, but congrats, Claudia. It's worked out really well for you and your family. Yes, absolutely. It's one of those things. There's going to be challenges along the way, and that's the fact of it, because there's no straight road to success. It's going to just, you're going to have to work on it. I guess what we'll do is we're going to say goodbye to the public group, go into our private group and do a deep dive and Q&A. So I want to say to everyone, thank you so much for joining us tonight. Really good to see you. Claudio, thank you. And congratulations on joining the team. Very excited to have you here. It's great.
Very happy.
You'll see a lot more, Claudio. We see a lot of you anyway, so might as well make it official anyway. So I want to say good night to everyone, and I'll see you next Thursday, and same time as normal. Bye-bye. Hopefully, next Thursday, I'm pretty sure I'm going to be telling people about the birth of my child, so we'll see. Cheers. Thank you. Bye-bye.